I think we can get started now.
Yes.
Okay. um, Good evening, everyone. My name is Mehul. I believe most of you are a member of Facebook group Indians in Seattle. It's great to see that Indian community in Seattle now has more than 40,000 members registered in this group. And this provides a great platform for all of us to connect and stay updated on the local events. Uh, SeattleWALA is just a next iteration from the same group. Um, we believe there are many experts in our local community, and this is a small attempt to provide a platform so we all can get benefit. Our vision with this initiative is to connect you with the local experts or local service providers in our community who will share the insights and their knowledge, and so you can make a better or right choices. We don't plan to promote a specific product or sell you something in this group or even in the today's educational video. We want you to ask any question to our experts and make your own decisions. I want to welcome all of you to our first live show event, and all credit goes to our sponsor, Ramesh Chinta. Um, we just, he, okay, so now let's basically go and jump into the topic. So recently, as you know, the Washington state passed a new law, which is basically require a new tax on employees to fund the long-term care insurance program. And this will be in effect from January 1st next year. Many of you have questions about this new tax. Many folks are looking to understand the impact on them, their spouse eligibility, what is covered, what are their benefits, where to basically get the plan from. Is there a basically an opt-out or a cash-out option in case if they decide to retire back in India, and many more. So today we have a expert with us, Anil. Anil has the 15 years of experience in the fintech areas. In past, he worked in Amazon, Starbucks, PwC as well. He was featured in the Forbes and the Yahoo News and many other industry magazines. And some of you may have seen even him in the TV Asia Telugu channel or a Sakshi TV channel as well. So without taking more time, let me welcome him and hand him over to share the overview of this LTC program. Anil, over to you.
Thank you very much, Mehul. And first of all, my sincere thanks for this initiative. So the objective and the vision and the purpose of all this sharing the knowledge with the local people. Your initiatives should be appreciated, and thanks for this opportunity to share my knowledge with my localites. So without any further delay, I'm just getting into my topic.
So just one small thing. So folks, if you have any question about LTC, please feel free to start adding into the chat window. We are gonna basically, we have some sort of a pre-populated question which we have received from few members. I'm going to ask maybe after 10 to 15 minutes. So, but feel free to add more questions for us.
Thank you. Mehul, can you see my screen now?
No, not yet.
I think you may need to add it there.
I think you need to share it.
1 second.
I'm going to remove my
Yes.
screen. So.
Yeah. Yes.
Yep, let me add it.
Tell me once you can see my screen.
Yes, I can see your screen now.
Okay. So, good evening, everyone. Thanks for joining today. And for the next few minutes, we are going to talk about the very interesting topic and the very hot topic, long-term care, new payroll taxes. Why this has become so popular and why everyone is discussing about this? Because this is mandatory. It means everyone has to pay some additional payroll taxes on their earnings. It can be W2 or it can be bonus payment, or it can be salaries, or it can be or any other incomes you have. So let's do a deep dive and try to explain. I will try to explain about what is this package, why government is collecting these new additional taxes. At the same time, I will also explain what are the options we have as opt-outs or alternative options. And if you have any more questions, feel free to post your questions in the comment box. I will take care of them after this presentation. So in this presentation, whatever I'm sharing, I'm just sharing my knowledge. It may be applicable, it may not be applicable. So I recommend you to please work with your financial advisor before you implement anything. So as Mehul said, this is a very brief about me. I have 15 years plus experience, and I am the CEO and founder of AG FinTax. We are Seattle headquartered operations, Seattle headquartered finance and tax and accounting services. We have clients in 40 states, and I am also featured on a lot of news media channels, Forbes, healthcare industry, restaurant industry, CPA websites, and many other places. And I am also a Forbes Finance Council member. I am so privileged to share the dais on the Forbes with other finance professionals in America. So let's get into the topic. What is this LTC care, LTC? What is this long-term care? At very high level, I am not going in more technical. I am trying to explain as simple as possible so everyone can understand. So long-term care is nothing but it's a non-medical help which is required as part of with that. It's a non-medical help when a person needs non-medical help with the activities of daily living, such as bathing, cooking, taking medications. Imagine, you might have seen many old people who are struggling with this. It's not only old people. I do also see, I have seen many young people also who are facing these challenges, whatever the reason it is. So, and if you need any long-term care, there is a specific steps we need to go through. I mean, if you're not able to do any of your daily activities, then you are tagged under you need long-term care support. How many people may get impacted with this LTC? As per statistical reports, 7 out of 10 we may need long-term care in the lifetime. So there is a very high probability of going to face this problem in our life. And the sad part here is the Medicare taxes, the Medicare facility. Generally, when do we get Medicare? Once you retire, when you don't have any health insurance protection or coverages, then government comes up with a sponsored program. It's called Medicare. Even the Medicare program will not sponsor or take care of the cost for this long-term care. So that is why it is very important. And why it is so very, if I get into a bit more details, why government has to take it so seriously, and why they are planning to offer long-term care benefits to every Washington resident, because there are 4 major drivers why government has taken this decision. The first one is, in Washington area, every 10 members may have 7 people. 7 people out of every 10 members may need long-term care, and because it is so expensive, this has an impact on the family. So once, if you are not able to do your day-to-day activities, the burden is passed on to your family members to take care of your family expenses. And apart from all this, it is a lot of stress. Just imagine, if a person is not able to walk, person is not able to eat, person is not able to move, it's so there, he has to go through a lot of pain and challenges. And this is very expensive. On average, in Seattle market, on average, long-term care costs around $120,000 per annum on average at this cost in this market now. In the future, just imagine in the next 10, 20, 30 years, how expensive it would be. So considering all these parameters, our Washington government has come up with a new act called Washington CARES Act. So what are those highlights? Just I want to cover only highlights here. Beginning January 1st, 2022, which is just few months away from now, every employee is subject to new payroll taxes. So which is nothing but 0.58% on all earned income. Every employee has to pay as payroll taxes towards Washington CARES Fund. So in this fund, they are collecting money through premiums from every employee who are working in Washington. And there is no cap to collect this premium. It means you need to pay 0.5% of premium even you are making $100,000 or even you are making $1 million or $2 million. So how much money you are making, it doesn't matter. For every dollar you may earn, just 0.58% you have to contribute to this fund. And what happens, I mean, why do I need to fund? Why do I need to contribute? So they put as some obligation on employers. Every employer, that is where you are working, every employer has an obligation to deduct this 0.58% new mandatory payroll taxes towards long-term care and remit that money to this Washington CARES Fund. So it's a mandatory, so it's an obligation. So every employer automatically deducts this money from every payroll check. And from this Washington CARES Fund, once government pools these funds, so then government will offer long-term care services, long-term care LTC services to all participants in their lifetime as long as they meet some criteria. So, and this is just an example. As I said, I run a tax business. On average in Seattle, the average income in our community is $130,000, and it's an average salary at which I took. If I take it 0.58%, the annual premium would be $754 and monthly equivalent to $62, and its weekly pay, per week it's $14.50. So every month, from your paycheck, you will be paying approximately $62.83 as part of new payroll taxes. So which is an additional burden on every employee. So then, okay, I contributed 0.58%. So what advantages I get? Why do I need to contribute? Because it's a mandatory. Everyone has to contribute, number one. Once you contribute, you have an option to claim long-term care benefits up to maximum of $36,500 in the lifetime. In the lifetime of you, as long as you are a resident in Washington state, you can claim these long-term care benefits. And from when you can start availing these benefits, you can start availing only from January 2025 onwards. So you will be start paying the premium from January 1st, 2022, but you will not be, even something happens before 25th January 2025 January, even something happens to you, you may not be able to claim it. So once this $36,500 which government is going to pay you from this Washington Care Fund, you can use it for different purposes. Like example, getting a professional personal care help at your home or any assisted living facility. I mean, whenever you are not able to do your own work, when you are not able to walk, when you are not able to do bath, when you are not able to eat, you need some personal assistant to help you. On top of that, if there are any medicine required or if there are any equipments required, all those you can use these funds to buy those equipments also. So then, when I am eligible to get this claim, so when you are eligible to claim this long-term care benefits, Washington CARES Act clearly defines that if you meet any of those three assistant requirements, like example, Washington, the Act has given some list: medication management, personal hygiene, eating, toileting, cognitive functioning, transfer assistance, body care, bathing or dressing or mobility. If you need help at least for 3 activities from the given list, then for the first condition is then you may be eligible to claim these long-term care benefits after paying premiums for few years. And number 2, you should have at least 18 years age old. So if you are under 18 years, you will not be able to claim this long-term care benefits. And the very most important thing is you need to be current resident of the Washington state to receive long-term care benefits. An example, you have been paying premium now, but after 10 years, you move to some other state or to some other country. And at that time, you need long-term care facility. You cannot avail these long-term care benefits if you are not a resident of Washington state at the time of claiming. And after you start paying the contribution for the long-term care, is everyone eligible to go and withdraw money for the long-term care benefits? Answer is no, because they have some conditions again. Even to be eligible to submit your claim, there are 2 conditions they have given. The first condition, at least in the last 10 years, you should contribute to long-term care fund for the last 10 years at least, and out of the 10 years without any break, you should contribute for at least for 5 years. An example, you started contributing from 2022. Maybe you have to complete for 10 years. On and off. You worked in Washington state for a couple of years. After that, you moved to some other country. Again, you moved to some other state or to some other country. Again, you came back. At any point of time, whenever you want to claim for long-term care benefits, you need to look back into the last 10 years. Did you pay contribution for at least 10 years or not? That is the first condition. The second one is, either first condition or second condition is, in the last 6 years, you have to pay premium for at least 3 years. So the second condition is a bit more easier. The first condition is where if you are on and off in the Washington state, for few years you are living in Washington state, again you are going back to some other state for a couple of years, again you are coming back. In those circumstances, the first condition will applicable. The second condition is straightforward. In the last 6 years, at least if you pay premium of 3 years. An example, in 2022 you started contributing 2022, 23 and 24. If you contribute for 3 years consistently without any break, then from 2025 January you may be eligible to claim this long-term care benefits. And also there is one more condition. You should also at least work for 500 hours during your per year. If in the last 3 years, you should at least work for 500 hours per year in the previous years. Okay, till now we covered about employees. So what about self-employed? If you are a self-employed, if you are a 1099 contractor, if you are running a single member LLC, if you are running a partnership LLC, then is it mandatory that you have to pay payroll taxes? Answer is no, because what they say is self-employed are by default opted out. It means you don't have to pay these payroll taxes unless you take a salary from your business. Example, you are working as a real estate agent. You don't take any salary, or otherwise you are working as an IT consultant. You are getting a 1099 for your IT services. So in those cases, you have an option to opt in. It means, hey, you want to use Washington state long-term care benefits, then you have an option to go and opt in. Otherwise, you don't have to go. By default, you don't get into this mandatory rules. And for suppose if you want to opt in, then you have to pay 0.58% on your total net earnings or gross wages. Then to be eligible, you can be either sole proprietor or member of a partnership or member of a LLC or an independent contractor, or as I said, there are many 1099 contractors, IT guys, IT consultants or real estate agents. Or if you're running in any business on your own, in those, then you are considered as a self-employed, and you have an option to opt in. You can go and ask Washington government, hey, I want to opt in. Then you can start paying the contributions, premiums, then you can start enjoying the benefits also. When you can do the opt-in, as of now the applications are not available. You have an option to opt in only in the January 2022. So the application will be released in January 2022. Right now no action is required for this year. Okay, so this is a very important slide. Okay, instead of paying 0.58% as payroll taxes, do you have an option to opt out? Answer is yes, as long as you have an active long-term care insurance policy from the private insurance service providers, a private insurance policy, and it should be active by you have an active, sorry, as long as you have an active long-term care insurance policy by November 1st, you should have an active policy, then you have an option to opt out. So you don't have to pay 0.58%. But to get this policy by November 1st, on average insurance companies takes 1.5 months to 3 months to issue a new insurance policy. So we are running short of the time. If at all, if you want to opt out, it's a time for you now to take an action now. Otherwise, if you don't have any existing long-term care policy, you immediately have to take some action items right now. Then the very important thing is, once you opt out, it's a permanent disqualification. It means once this year you go and say that, hey, I don't want Washington state government long-term care support because I have my own long-term care policy. In that case, once you opt out, you are opt out permanently. Even in the future, if you want to opt in, you don't have an option. And the important thing is, you have to opt out now. If you don't have option, if you miss these options to opt out, you have to pay Washington these new payroll taxes forever. So it's very important to opt out and go out and get a better insurance policy than this. So how do I opt out? As I said, you have to have an active insurance policy in effective by November 1st, 2021. You should have 18 years age old, and you should submit an exemption application to Employment Security Department. Employees, that is, you have to submit this application. Your employer will not be responsible for this. You have to go and opt out. And these applications are not available at this point. Applications will be released from October 1st, 2021. So after October 1st, you can still go and submit an application to Employment Security Department. And how much time you have to opt out? You have time till December 31st, 2022, by next year. But the condition is, you need to have an active insurance policy by November 1st, 2021. So which is just a couple of months away from now. So it's very important. It's a time sensitive action. You have to take it. And the other thing is, and in the future, once you get this exemption approved, you have to get a formal approval from Employment Security Department. This document you have to continue to submit whenever you change a new job. If you want to go and change your new job, it's okay. You don't need to pay Washington payroll taxes as long as this formal written approval from the EST. So the very key dates which are very important to remember is, October 1st onwards, they are opening up the window to submit your opt-out applications, but it ends by December 31st, 2022. And October 31st, 2021 is the deadline to have an active long-term care insurance policy to even go for opt-out. So then, if you miss to opt-out, the premiums will start from January 1st, 2022. So the dates are very, very important. So please take actions as early as possible. And you can start paying the premium from January 1st, 2022. But you can start claiming long-term care benefits only from January 1st, 2025. So, and if you have any more questions, feel free to post questions here. If you are watching this video, a recorded session later, still you can post your questions in the comments box. I will try to answer to the extent possible. Otherwise, you can even send an email to me. You can call to me. You can schedule a meeting with me. I will be very much happy to help you and guide you. And if you want any guidance, I'm happy to serve my localites. You don't need to pay me anything, but I'm happy to share my knowledge with you whenever it's required. And I will open up for the Q&A. Thank you.
Thank you, Anil. Thank you very much. I think it was a very informative. I hope the people who are watching right now, they also feels the same. People, please show your gratitude by clicking on the like symbol or whatever the symbol you have, so we know that how valuable this information is. So, Anil, I have a few questions, and I'll basically start. Okay, so let's say many of us who are living in Seattle, they are on a work visa, either they are on H1B or L1 visa. And sometimes everybody feels that, hey, there is an unfortunate situation happens where they basically decide that, hey, I wanted to move back to my country. Um, is there a way for somebody to basically opt out if they basically relocate to their home country?
Yep. Okay. If you have to go back to the country, yes, you can go back. But if you are depending on Washington state supported long-term care, then I'm sorry, you will not be able to claim any benefits if something is required in the future, unfortunately. Because to claim Washington care benefits, you have to be current resident of Washington state at that time. When you want to claim, at that time you have to be in Washington state. But if you go for an alternative option, it means if you go and buy an outside private long-term care insurance policies, then few companies are offering international support also. Like example, there are some companies like Nationwide. If you go to the Nationwide coverage policy, even they are giving long-term care even for the H1 candidates also. Even you go back to India, still you can go and avail these benefits even from India.
So do you think the people basically should make a choice? Because I think what I've seen is many companies are offering a discounted plans through Transamerica or Trusted Care kind of a thing. And as you mentioned, there are some private companies also are offering a plan which basically can work even when they basically relocate to the other countries or other state. Which one would you suggest to folks?
Okay, I strongly recommend you to consider going out for a private insurance policy rather than employee based. So employer based. So when you go to the employer based, you need to check with them what are the terms and conditions applicable. And rather than going for pure long term care, I recommend you, anyway you are putting, just I recommend you to go for a bit more insurance coverage also. Many people underestimate the power of insurance. You
Yep.
don't have to spend a lot of money to get an insurance protection. There is no guarantee for tomorrow. There is no
Yep.
guarantee that you will wake up. There is no guarantee that you will continue to work for the same employer. Like example, I was working for Amazon. I used to have a coverage in Amazon, but at one point of time I decided to quit Amazon. So now I don't have any insurance coverages from the employer. So I recommend you to consider something like insurance and also the long-term care at the lower premiums. There are different options are available. So that's what my recommendation. Rather than going for the pure long-term care coverage, this is the time even to explore other options also.
Great. So it's a good segue to the next question also. So sometimes people basically decide to leave their existing company and they switch to another company. And if they have basically enrolled with the company provided discounted plan, what happens in that situation?
Okay, so I'm hearing different things, but you need to check with the employee that each company is offering different types of policies. So I strongly recommend to check with the service provider there whether you can avail the long-term care benefits even you left the company or not. But I heard there are some companies are offering long-term care benefits only you are working with that company only. Like example, if you are, I don't know, I mean you may check with the respect to companies. Maybe if you are working for an Amazon, so if an Amazon tied up with the Transamerica and they are offering the services, but I strongly recommend you to go and check whether can you avail long-term care benefits even after leaving the Amazon or not. So because company to company it is changing, there are many companies are offering long-term care benefits at discounted prices to employees. If there is an opportunity now, I recommend you to go and consider it, because many outside insurance companies stop taking insurance policies now, applications now. So because of overflow of applications, many companies, including New York Life Insurance, Nationwide, Transamerica, and many other companies also stopped taking new applications. So if you have an option to go with your employer, I recommend you to consider that before you but you consider it and opt out. So opt out is mandatory, is what I say. That government $36,500, it won't be enough for anything. So what I recommend is go for the government supported one only if you have some health problems, because long-term care long-term care insurance policies cannot be given to everyone. If you have any health problems, your policy might get rejected from the private insurance company. In those circumstances, I recommend you to go with either through employer or through government supported Washington Care one. So those are.
So this is one of the question came from the audience as well. The question from Praveen Patel is that what insurance company can we work to buy the long-term insurance? As you mentioned, there are many private insurance companies are also here. Would you suggest any or set of the companies for Praveen or other people to basically check it out?
Yeah, okay. So there are, till yesterday, there were few companies were accepting, but in the last 1 week, many companies have stopped taking applications. But right now, as per my knowledge, there is only one company is offering national guide, NGL we called national. I think there is a national guided. I believe. 1 second. Okay, National Guardian Life. There is only one company which is offering, and there may be some more companies. Some companies are opening up doors again and they are closing it. So I strongly recommend you to work with an insurance agent or financial advisor rather than you directly go, because you may not know what are the options are available. You may not know because you are not a professional in that area. You may be missing something. I strongly recommend you to work with your financial advisor or an insurance agent, or even reach out to me later. We are on top every day. We are checking which insurance companies are taking up the applications. But right now, it's only national. Only one company is what I am seeing at this point. National Guidance, NGL we call. So.
Sure. So this is a question also from another audience, from Adi Narayan. So what's the logistic of actually opting out after they purchase the LTC policy?
Okay. Logistics means once you get the policy, then you have to submit a written approval request. There is an application which is going to come up from October 1st onwards. You have to submit an application to Employment Security Division, ESD we call. You have to submit an application, then they have to approve it. And there is an option. They may even ask for more documentation before even they give the approval to you. So but that applications are not yet available. They will be releasing only on October 1st.
Got it. Okay, thanks.
So but before submitting an application, you should have an active long-term care policy.
Sure. So another question is that when somebody basically decide that they wanted to relocate for a good, and if they have fulfilled the minimum requirement, can they basically claim those LTC benefits in a foreign country like India?
Okay. Again, there are two things. One, Washington state supported one, private outside. If you go for the Washington state one, no, you cannot claim insurance benefits if you go out of the state. Forget about out of the country, out of the state. If you go out, you cannot claim. That is why we recommend you to go with the private one. So private one will give a protection even you go out of the country also. Again, you need to go and choose the right insurance policy or the right insurance service provider who can give an international coverage. But as I said, many insurance companies have already stopped taking applications right now. We are every day we are filtering out who is offering. So definitely, I strongly recommend you to work with your advisor for the guidance.
So the people who are basically on this temporary visa, H1B or L1, where they have an uncertainty of staying in America, then your suggestion is to basically look at or check out the private companies options.
Exactly correct. Yes, correct.
Got
Unless your incomes are less than $70,000. So if your income is less than $70,000, 0.58%, which is government is taking care of that, go for that. But otherwise, I personally felt Washington's government, whatever it's offering, it is not a good one. The average salary in Washington, a Washington resident makes is $55,000 approximately. So they designed this policy considering the $55,000 income per annum, because the maximum you can claim as long-term care benefit is only $36,500. It won't be enough at all. Even
That won't
it
be
won't
enough
be enough
for here.
for at all. Even for a couple
Yeah.
of months also, it won't be enough. So I strongly recommend you to go for the private one, so that even you can enjoy the you can claim if required, even you are out of country.
Yep. So another question is also about that. Hey, I have a HSA plan, and can I basically use my HSA plan, which is a health saving account? Um, Specifically, they all basically pay for that. Sorry about that. My phone Siri started. So, is it possible to basically pay the premium through my HSA plan on a yearly basis?
Answer is no, it's not allowed.
Okay, got it. um, Another question. Let me take it from the audience. 1 minute. So this question from a Shrikant Rangnathan: can I withdraw the contribution if I decide not to avail care from the Washington Cares Fund?
No, you cannot withdraw your contributions. So only you have an option to opt out. So then you don't need to contribute. But once you do it, done. You win. And the opt out option, like example, what I say is, you have to, as I said, even to opt out, you need to have an active insurance policy somewhere. So when you have an active insurance policy, why do you contribute there? So it's just Shrikant, just answering to your question, you cannot withdraw your contributions.
Okay, so now this question is a very common scenario, which is covering the homemaker situation. Because some of the spouse are basically a full-time homemaker in this scenario. So how a person can apply for a long-term care for their spouse? And let's say in case for any unfortunate situation, if their spouse needs a long-term care and they haven't enrolled in this plan, what happens in this case?
Okay. So long-term care benefits are specific to one person. So if a couple of things, couple of points actually I want to cover here. First of all, if your wife is not covered in your insurance policy, it's not there. And government, if you go for the government supported Washington state government supported long-term care, it's only designed only for the individual only. And there are some companies who are offering long-term care jointly. So if you want to go for a long-term policy for the joint family, then yes, both are covered. But there are very less options are there in that category. And if your wife is not working, you have to go for a new policy for her, number one. And the other very important point here I want to mention is, if you want to opt out, it's a lifetime, only one time opportunity you have to opt out right now. Like example, right now your spouse is not working. Maybe after 2 years she gets a job, and if she go on jobs, joins in a job, she has to pay 0.58% payroll taxes forever, because there is no more options available for the opting out. So if your spouses are planning to work in the future, I recommend you to get a long-term care coverage even for your spouse also, and go and opt out also right now. So that is important thing. And the other thing is, don't think like I noticed many of my clients, or many other people who are asking me, they are considering this is an extra cost. But no, please consider this, they are trying, government is trying to open your eyes.
Yeah,
It's almost is a very very important one.
yeah, this is a
Imagine
risk
for every
mitigation thing.
10,
Yeah.
if every 10 7 people are impacted. So we don't realize it now, we are very young and active, but in the future something is required. To where will we go? And right now it's approximately, if you go out for a nursing facility, it's $120,000 per year at this cost, today's cost. How the medical costs are going, what do you call, what is the inflation on the medical costs in the next 20-30 years, how much expensive it would be. Take this as an opportunity to understand more about long-term care. At the same time, ensure that your family is properly protected from the long-term care. Otherwise, you may be putting all your savings. You may be losing all your savings just for this long-term care benefits in the future. So
Yeah. So
don't try to
yeah.
escape. try to take it as an opportunity and get the proper coverage for your family.
Thanks, Anil. So some of the individual have already opted for this plan from their employers. And let's say, do you think this premium which they have basically selected, is it going to be increased in case if they basically switch out from that company?
That I cannot comment, because as I said, it depends on what terms the insurance service provider is offering there. So otherwise, if anyone has some questions, every company, what they do, like example, Amazon, Microsoft, T-Mobile, what is called this one, Boeing, all these bigger companies are offering discounted long-term care packages, insurance protection packages to the employees. And if anyone wants me to review those terms and conditions, I'm happy to review it. You don't need to pay me anything. Just I'm happy to help you. Just share. You can just send an email to me. I'm happy to review, and I'm happy to answer all your questions if required. What I'm saying is, from company to company, the rules, terms and conditions, rules are changing. So there is no standard answer for your question in this scenario.
Got it. So in case when all the individual basically pay their premium, do you know if they can basically get the tax deduction at the next year?
No.
In this?
No.
Okay. Okay. And another question is, what happens when a person basically decides to switch a job or they become unemployed? Because I think in the previous slide, what you showed is that there is a eligibility criteria they have to meet in the 10 years of time, right? So they have enough amount of time to find another job and then resume the paying the premium, right? So there is no
Yes.
impact as such.
Right, you are right. As long as they are the current residents, it's okay. On and off jobs, on jobs off is okay. But I mean, you need to meet those criteria. You have to pay at least for 3 full years of long-term care insurance premium to avail those benefits.
And in some situation, if when wife and husband both are working in a different company, someone is Amazon, someone in Microsoft, and both basically buys the affiliated or not affiliated, but they basically buys the discounted plans from their own employer. Is there an advantage of taking a joint policy instead of applying individually and paying a separate premium every year?
Okay, I have not seen any joint policy they are offering. But if at all, if someone is offering, then yes, there may be an advantage. But I have not seen anything like that. I don't think they are offering joint. I mean, it's
Okay.
individual. The policies are individual specific.
Got it. Okay.
But I mean, if at all, if they are offering, and if you are getting for a better prices, then yes, we can go up to it.
Okay. And let's say if the spouse is not a homemaker, but if the spouse is running some sort of a business, do they still need to take the long-term care, or is it only basically being enforced for the employees only?
Employees only. That's what I covered a separate slide exclusive for the self-employed. If the spouse is working on a 1099 or maybe some home-based businesses, they come under self-employed. If they want, they can go and ask the government. Otherwise, by default, they are opt out.
Got it. Okay. Is there a penalty in case if person takes the insurance and then cancel it later and or didn't basically make the payment for any reason?
Okay, so those rules are not yet published by the government yet, but many people are asking me what happens if I go for policy now, I get an approval from the employment state department, after that I will cancel, what happens? I don't have an answer at this point. So what controls government is going to bring in, I don't know. At this point it's not clear.
Okay. And I am sure this is you already covered in the slide, but I think it will be good to give a refresh to our audience again. How long should we plan to keep long-term care active to claim the benefits?
Okay. As I said, it depends on, again, are you going for this Washington state one or private one? So your policy has to be active to claim these benefits, number one. Number two, you have to pay for, you have to, as I covered in one slide, you have to pay for at least 3 years in the last 6 years. And every year you should work for 500 hours every year at least. So if you meet those conditions, then you can go and apply, go and claim long-term care. And you need to meet at least 3 conditions. Whenever you want to go and claim, a specialist, a health professional will come and ask you whether are you meeting any of those 3 conditions from the big list, whether are you able to walk, are you able to eat, are you able to do your own works. There are different things, the big list is given. So there may be 2 opportunities there, 2 options they are giving. One may be self declaration. Otherwise, a medical professional will come and ask you, they will check, then they confirm, yes, this person is eligible to claim long-term care benefits. Only in that circumstances only you can claim long-term care, and provided you need to be resident in the state at the time of claiming the long-term care benefits.
And do we have to collect the premiums for the employees who don't live in the Washington state?
No, not required. This is only for the people who are residents, who are whose work location is Washington state.
Okay, so because now these days many people started working remotely, so for them I think this may not be in force, as you're saying.
No. It's not about
Oh,
like
so you're saying
example.
work location. Okay,
Work
got it.
location. I mean, the employer has to confirm what is this person's work location.
Makes sense. Okay. Next question is like, if I get an approved for an exemption, will I need to reapply annually?
Not required. It's a one time. Once you get approved, you don't need to apply. It's a permanent one time. You don't need to reapply.
Okay. And can I opt back into the Washington cares if I lose my private long-term care coverage?
Okay. So when will the situation arises? It may arise, but you cannot opt in again. You cannot go back to the Washington state government and say that my private insurance guy declined my long-term care coverage for whatever reason. So can I go and opt in now? Answer is no. You cannot go. Once is opt out, it's a permanent one-time decision. That's it, lifetime. You cannot go back and ask the government, hey, come on, help me. I want to pay with a premium. They will not allow you.
Okay.
And it's only a lifetime, one-time opportunity to opt out. For suppose if anyone misses to opt out now they don't have an option to opt out later.
Okay. And now this is another very famous question coming, that what's the best way to search for a plan and make a decision? Because again, everybody is trying to Google on this thing. So if you have to look right now, what's the best way to basically search for a right plan for me?
Excellent. This is a very, very good question. So if you are depending on Google search, there are always many people are trying to sell some policies there. That's what I noticed it. Or otherwise part information is there. Because you are not a financial advisor, you don't know the in and out of the insurance policies and or about the act, you may be missing something. I strongly recommend you just go and talk with a financial advisor, or if you're working with a tax accountant, or if you have a CPA, or if you're filing a taxes with someone, even he may be able to guide you better. So rather than going and depending on the Google search, I strongly recommending you to go and find a person who can help you.
And you know, somebody always basically missed the deadline to apply. So does it mean that they can be exempted from the program, or they basically, the employer is going to enforce taking the 58 cents from from $100?
Yes, they are going to enforce it. If you miss that deadline, boom. So that's what is very important. Still, many people are not aware of this, that they are going to pay 0.58%. And many people don't have the long-term care coverage protection. Some people have insurance coverage, but insurance coverage is different from the long-term care coverage. So if you already have an insurance policy, maybe a term insurance or maybe a long-term, maybe a permanent insurance, go and check whether you have a long-term care rider or not. If you have it, then you are good, and you have to opt out by the given period, and the policy has to be active by November 1st. Otherwise, you are going to pay 0.58%. So, and in our community, many people take action items in the last minute. Till last minute, they delay it and they rush. But I'm sorry, and right now, many insurance companies stop taking new applications at all. So still it is fingers crossed. Even you submit an application right now, there is most of the insurance companies are not giving any guarantee that insurance policy will be issued by November 1st. So you are already running out of time. You have to take action item right today. There is no tomorrow also. You are really running late.
Okay. Great. I think that's pretty much question from my side. Audience, if you have any question, we will wait for a couple of more minutes. Please go ahead and add your question.
I see one question from Srikant Ranganathan. Should I couple life and long-term care together? So life insurance and long-term care. Can you? I mean, is it recommended? My personal recommendation, yes, because I personally have. I think maybe I have around $2 million plus protection. I have life and long-term care. My wife also has it's somewhere around $2 million protection for life and long-term care. I personally, because we put lot of money on stock market, real estate, or maybe Amazon stock, Microsoft stock, or maybe sitting in your bank account. I always go for diversification of investments. So go for both. I mean, I know that some people come and say that, hey, instead of this, I will go and put money in the stock market. I will make much more returns. Yes, but you should have a portfolio of investments, diversification of investments. So I strongly recommend, like, see, what is guaranteed in the life, our death. Can anyone escape from this? It's 100% guaranteed. Every person will die. Then get some coverage, life coverage, a permanent life coverage with a long-term care that may help you in different ways. Maybe it's a tax-free benefit, and it may be helpful for your next generation, or even to take care of your estate taxes. So if you have to pay some estate taxes, that may all this money, whatever the extra money you are going to get, your family is going to get, that may be helpful also. But you consider it. I'm not asking you to put all your money there, but at least have some very nominal life insurance protection, because if you are working for a very big company, there is no guarantee that you will be with the company forever. And as you are becoming older, the risk, the health condition may not be great, and even you may not even get an option. Even you want to go and apply for insurance, maybe after 10 years, no company may be even giving to you. So it's better to go and get the life insurance when you are young. And I'm saying go for a minimal, small amount, not for a very big millions of dollars. At least go for a smaller one. That's what my recommendation. Yep.
This is great. If no more question, I think I'll wrap up this session now. Again, Anil, this was a very informative session. We truly appreciate your time to help our local community. And again, the message from SeattleWALA is that yes, plan is and the vision is to help you guys to connect with the local expert like Anil, who will share such a great insight and answer all the questions. So you are basically can make the right choices here. Thank you again.
Thank you, Mehul, and thanks to SeattleWALA and also other also team members who is leading this, like Ramesh Chinta, and also other members, Ashok Galla, and thanks to all the leaders who is bringing this value added services to the local community people. It's really a great initiative by SeattleWALA. Thank you very much. Thanks for giving this opportunity to share my knowledge. Thank you. And anyone has any questions, I will share my contact details. Just reach out to me. Forget about whether insurance or not. Anything you can reach out to me. Taxes, accounting, finance, tax planning, whatever it is, anything about the money, I am there for you. I am a local guy. Just one message away. I am there for you. Just reach out to me. I'm happy to help you. Thank you. Thanks, Mehul. Thanks.
Thank you.